Morning, team. So I wanted to do a quick recap over the Pinterest earnings trade I took yesterday. As we all know, earnings trades are inherently very high risk trades. Why? Because big moves happen and they are extremely volatile. Why did I take this trade? Because I love volatility and all the factors that go with that. So the objective of this was not for me to make a speculative move on on Pinterest and the information that was going to come out in the earnings. Okay. The objective of this trade was to capture the implied volatility and hopefully the theta in the contracts. So fair enough. To keep it short and sweet, step one, you guys can see I entered the trade 20 minutes before bell ring. All right. I entered at that time to be able to capture any more of the implied volatility that was being priced into those options. Number two, as I said before, I did not want to take a directionally biased trade on this, so I chose to take a somewhat market neutral position. It's an inherently bullish position, from the nature of selling puts, but nonetheless, it was intended to be a market neutral move. So, number one, I had to determine my entry time. Okay, we discussed that. Number two, I had to, you know, decide what option strategy I wanted to employ. As I was just feeling a little bit lazy and have had a lot going on. Um, I just wanted to keep things super sweet and simple. And so I went out there in that option market. So I sold some of them puts. All right. How did I choose that? All right. That's the meat and potatoes, my team. Okay. In this strategy, we're going to be using something called the expected move. It's noted here, and I have an indicator provided for all you guys for the Thinkorswim platform for it. But nonetheless, we'll have some classes later on the math and the dynamics behind the expected move. Long story short, the expected move is more or less a range that the options market has priced in that underlying should statistically stay in. Fair enough. We'll go into detail on this in a webinar. But nonetheless, you guys will see here I chose to sell the 25 puts. How did I choose that? Well, I have the expected move, which we know about, okay? As I wanted to stay somewhat market neutral, okay? I wanted to stay outside of that region, and a key component of this strategy is following the open interest. So step one was to determine if this was a trade I wanted to take, and considering that it did not breach either side of the expected move, we're good to go. Took I needed to determine my strike price, so I looked over to the option chain. Okay. I stayed outside of the expected move, and you'll see here that I judged out from where we were, and then also I kind of judged out from where we were from the open and the close of the day. And you can see we were safe. We hadn't breached that. I want to stay within, one standard deviation move on here. Okay. And when I was looking at that option chain, I could see those 25s had a lot of open interest on them. So I like to follow the OI. I think that's a good thing to remember. Step three was to determine my position size. So we'll be talking about using this strategy and how we can manage risk in the event that the trade does not go according to plan. There's a bit of details to that one. So you can see right now it's 7:28 on February 7th. Trade went on the table yesterday, and market is going to open in 1 hour. So I've yet to see how this trade completes. Um, but risk management has been taken into account for. As you can see, I've noted my break-even point, and that determined my position size due to the size of my account. As we know, selling puts, okay, has some inherent risks with it, so I need to be aware of that and consider that when I'm employing my risk management into the trade. Fair enough, but I have a clear and defined risk management strategy for these trades if they go a little bit tits up. So nonetheless, yeah, 3-step process on there. We will go over that in some future classes, but quick trade breakdown. Let's see how this thing opens up and settles out, and I'll follow up with you guys later on it.